If you're filing taxes soon, you'll probably want to know two things: the deadline and your refund date. Here's what we know: tax changes in 2026, plus the questions people ask most as tax time gets closer. First, the deadline. The IRS expects about 164 million people to file by April 15th.
Oh my gosh, just like Christmas all over again.
For refunds, if you file electronically, the IRS says that your refund should take 21 days or less. If you choose direct deposit, it can be faster. If you file on paper, the IRS says the refund could take 4 weeks or more. And if your return needs corrections, it can take longer. Want to track it? The IRS says the Where's My Refund tool typically updates within 24 hours after you file, or within about 4 weeks after you mail a paper return. It updates once a day, overnight. Now the big follow-up question: why would a refund be delayed? The IRS points to a few common reasons, including paper filing, errors on returns, or situations where the IRS needs more review time. The IRS also says do not count on a specific refund date to cover a bill or a big purchase. If you claim credits that can slow things down, this is the date many people watch. For some early filers, claiming the Earned Income Tax Credit or the Additional Child Tax Credit, the IRS says its tool can show projected deposit dates for most people by February 21st. Now, another question that people are asking every year: what is a normal refund? There is no normal refund for everyone because it depends on your income, withholdings, and credits. But one recent benchmark in filing season coverage is that last year's average refund was $3,167. That same reporting projecting that it could be $1,000 higher this year, though it varies by household.
A little bit more of a refund would give me a little more money for my car payments and car repairs, a little bit more for food for my family as well.
Now, here's why timing is really on people's minds this year. The IRS reports starting 2025 with about 102,000 employees, ending the year around 74,000 after firings and layoffs tied to Department of Government Efficiency. It also cited the National Taxpayer Advocate, an independent watchdog inside the IRS that helps taxpayers with stuck cases and reports problems to Congress, warning that these cuts could make filing season harder. Now, the question that people are searching that's not really about filing is about policy. President Donald Trump's One Big Beautiful Bill has passed, and most of the tax provisions took effect in tax year 2025, meaning the taxes you file in 2026, with some provisions in tax year 2026 and a few retroactive to tax year 2024. So what are people actually asking about? One is tips and overtime. Are tips and overtime now tax-free? The law creates a temporary deduction for tips up to $25,000 for tax years 2025 through 2028. TurboTax notes that it's a deduction, not a dollar-for-dollar refund, and that savings depends on your actual tax rate.
No tax on overtime this year. And so that's $12,500 if you're single, $25,000 if you're married. It's only on the extra 0.5. It's not on the whole thing.
A lot of the reporting that's going to be required this year on your tax return is going to be self-reported. That could cause an actual audit or trigger a warning, a CB 2000, which is a form the IRS will send, and it will say, hey, our records don't match yours. Why?
Another one is SALT. That is the state and local tax deduction, which includes things like local income, sales, and property taxes. The law increases the SALT cap to $40,000, effective tax year 2025, with a bump to $40,400 in 2026, and then a 1% increase through 2029. The deduction begins to phase out when the income is above $500,000 or $250,000 for married filing separately.
Remember, you got to first crest that hurdle of the standard deduction of $31,500 if you're married filing joint.
Well, that increased from $10,000 to $40,000, which is a great opportunity for taxpayers to maximize itemized deductions.
And parents starting in tax year 2025, the child tax credit increased to $2,200 per child under 17 years old with inflation adjustments,
which is an increase from $2,000. There's a $6,000 deduction per person for Social Security if your income is below certain limits, like $75,000 if you're single or $150,000 if you're married filing jointly.
If you're included in these policy changes, they're not something that you want to guess in February. The fine print can change what you qualify for, what forms that you need, and what counts. So if your big question is what should I do right now, the answer does stay pretty simple. Give yourself time, know the deadline, file electronically if you can, and use direct deposit. Track those refunds through the Where's My Refund tool, and if your return includes credit, needs corrections, or you're dealing with a new rule like tips, overtime, or SALT, build in extra time and double check those details before you hit submit.
Protect your social, protect your information, avoid the unsolicited calls, and file early.
Check the description below for tax time information mentioned in this video and all the ways to watch and keep up with us on YouTube and beyond.